In Investing 101 today, John Bever, president of Phase 3 Advisory Services and a principal with Royal Alliance Associates, joins us now to talk about how to put together a post-pandemic portfolio. This is important, John. Where would you start?
Well, the first place I would start would be with value stocks. Growth has really dominated here. The last 15 years, growth has beaten value by almost 3-1. When we throw in dividends, it's still 2-1. So there's a lot of overweight portfolios with growth. History, though, shows that over time, value beats growth. We're starting to see a turn. We'll see if it's going to last. But since February of this year, growth has been flat and value was up 20%. But that is by no means the end of the rally. There's a long way to go here. If you're looking for sectors, you could consider consumer staples, finance, especially digital finance. And remember, growth does perform well the first couple of years after a recession. So we may still have a couple of years where growth does beat value occasionally. But what I would use the growth gains that you have, strip those off and use those to start to build the value side of the portfolio if you haven't done that yet.
John, investors and traders are concerned about inflation. What's your thought there? Where does that fall on your list?
Second area, inflation exposure. This would be energy, basic materials, mining. There's a lot of pressure on rare earth metals, platinum, palladium, lithium, vanadium. And the Federal Reserve continues with its easy money policy, and Washington is on a spending spree. So we may have an environment that starts to look like the late 1960s. So don't forget that inflation piece of the portfolio. We see that many portfolios are underweight to that exposure.
What's third on your list?
Third thing, raise some cash here. Valuations are stretched. In fact, household allocation to stock right now is higher than it was at the high going into 2000. Doesn't mean that the market has to turn down, doesn't mean we're going into a bear market, but it does say that those valuations are stretched, so not a bad time to take some money off the table. The S&P is up over 25% from the top from February 2020. So that's still a good rise. Again, that we would be due for a pullback, and this is a good time to raise some of that cash. You can allocate some of that cash into value if you're still low on that side of the equation, but also small caps still have a way to run.
Thank you, John, for helping us out with Investing 101.
All right, you're welcome. Have a great day.
Check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.